Is it true that a goldfish only has a memory of 30 seconds? Hey there, Les Sulgrove here. Hey, the idea that a goldfish has a memory span of only 30 seconds is actually a myth. In reality, goldfish have much longer memories. And in fact, research has shown that goldfish can remember things for months and can be trained to recognize different shapes, colors, and even sounds. And that applies to realtors and home buyers and home sellers too. So my point of all this is we all remember while mortgage interest rates were around the 3% range 2 or 3 years ago, many of us in the business know that current interest rates are still very, very good and actually could be much higher. So this past week, the 30-year fixed rate mortgage finally made a measurable and much welcome downward turn to just under 6.5%. So let's spend today on today's show talking about how mortgage rate fever has broken and how this is affecting the central Iowa real estate market. So let's jump right in here. Um, this is really going to be all about mortgage interest rates this week. And so hopefully you'll be able to take some information from here and take it out and talk about it. If you're a realtor out there talking about it with your clients and your customers, if you're a consumer watching this is a good show to watch as well because it's it's going to uh, um, kind of give us a little bit of I can't think of the word. It's going to give us a look forward of maybe where interest rates are going. So let's start off first of all with a little history lesson here. So this graphic here you can see is from 1971 all the way to 2024. This is 1971 is the year that Fannie Mae started to track 30-day average, or sorry, median mortgage interest rates. So back in the 80s, 70s, and 80s, you can see that, man, interest rates were really all over the place. And this is where I said things could be much worse. In fact, the 1980s, if you were buying a home in that period of time, it was not uncommon that you were paying double digit in mortgage interest rates in those times. Once you got into the 90s, things kind of started to slow down. This is where I got in the business right here in 1990. And I lived through the 10, 11% interest rates for a long, long time. It seemed like interest rates were around 7, 8, 9% for me. So this graphic kind of shows you by decade what the median rate was for that decade. So in the 70s, it was almost 9%. The 80s, it was almost 13%. 90s, somewhere between 7.5% and 8%. 2006, or 2006, a little around that 6%. You get into 2010s, and this is where a lot of the memories are kind of holding on tight. They remember rates being much lower than they are today, but they really probably really remember these 3% mortgage interest rates. And so when they apply that memory to those low interest rates, they're probably still remembering these, but they're just saying that, oh, they were 3% for a long, long time, and they really weren't. And we'll show you that here in a minute. So median rate we've had since the last 4 years or 5 years has been right at that 5%. So it's not too bad. So let's kind of start to zoom in here. So we're going to look from 2010 moving forward. And in fact, before we do that, this 7.38% is the actual median rate from 1971 to date, which means basically all the rates were either above 7.38% or half the rates were below 7.38%. So that's the median, the middle point. So going back to 2010, so the last 14 years, up until about 2019, I would say we probably saw, I mean, yeah, there were some times where they rose and they fell a little bit, but in the grand scheme of things, this is fairly stable. Rates would come up a little bit, they'd come down a little bit, um, but they really never bumped into the fives. They approached that in 2019 early, but never really got into the 5% interest rates. Never really got below 3.5 a couple of times. It wasn't until we got into this period of time here, which we'll talk about next. But the median rate from this last 14 years was at 4%. So we're throwing around a lot of numbers today. So this would be a good one to go to Des Moines Market Values and download the show graphics because all of these numbers are going to basically apply towards the time periods I'm showing here. And obviously, we saw post-COVID, we saw a pretty good jump here. We'll hit that here in a second. So let's zoom in. In fact, speaking of COVID, let's go to 2019 to 2024, the last 6 years, 5.5 or so, 6 years here. And you notice here, I've got the markers here where COVID began in March of 2020 and where it officially was determined ended by the government, May 11th of 2023. And so that COVID timeline, spanned all across, 2 full years and just just a little over 3 years in total here. So two years full, 2021 and 22, and a little bit into 2023, and of course most of 2020, where all the craziness really happened here. Um, the median rate on that period was only 4.06, so just over 4%. And that's even with these record low rates. So this little line right here, this is where it goes sub 3% for the 30-year fixed rate. It wasn't below that 3% for a very long time, but people remember those rates and they just automatically associate that those rates were 3% for a very, very long time, and they really weren't. They were just for periods of 2 or 3 months here in 2021 and a few months in 2020. And a lot of that was baked in by the economic factors from the Federal Reserve and the economy. So let's zoom in just a little bit closer here because I want to take a look at this period where rates really did a sharp rise here. And we're going to look from 2022 to present. So we've got 2 years plus this year, so just over 2.5 years of history to look at. And this 2022 was the wake up year for mortgage interest rates. As fast as rates rose, stayed fairly stable. I mean, yeah, there was again kind of like prior to those prior graphic I showed you, where rates over the 14 years, where rates would kind of go up and down a little bit. We kind of saw that after the rates finally hit their peak at that point in time in 2022 at just over 7%. We did see a pretty good spike last year where it flirted with 8%. But for the most part, this was the period of time right here where we saw the most frustration and angst by home buyers and home sellers when interest rates were rising quite dramatically from that 3% up to almost 7%. So median interest rates there were 6.63% for that period of time. And so let's take now, just zoom in even farther, look at just 2024. And we're going to also, this is the 2024 by week, and the black line indicates 2023. So we're still looking year over year, but this is weekly, and I've got the rates on each one of these column charts here. And you can see week 18, which would have been, I want to say October, it was 7.22%. That was the highest we saw for mortgage interest rates so far this year. And actually, when we slide all across, let's go ahead and slide on across here. You can see that the black line continues to rise last year. And we saw that rise up to almost 8% last year. But what I'm really focusing on right here, the biggest news this past week is this interest rate of 6.47%. It's almost 1.33%. It's at more than 1.33% lower than October of that 2023. So there's that 7.79 I pointed out earlier. We're currently over 1% lower than we were at the same time, or not the same time, but last year at the height of the highest mortgage rate. So this is helping fuel a lot of home buyer confidence. I think we're going to start to see some changes in the coming weeks as far as inventory. I've got an inventory slide in a second here. But let's kind of look at the weekly now, week over week mortgage rates. This is the standard graphic that I typically show you. And again, here's the earlier part this year at 7.22% was our year-to-date high. Here's that really high over here from last year. But look at the stair stepping down here compared to where we were last year. If you were buying a home going into the last part of the summer last year, rates were on the rise. In fact, they were on the rise 1, 2, 3, 4, 5, 6 weeks before they had a couple of steps down, then a couple of minor steps up, and then they just shot way up near the end of October. And this kind of panicked the market. Everything kind of started to slow down pretty dramatically at that point because home buyers were going, holy cow, we're looking at houses and just in the last week or two during that period of time, rates would be jumping. And, it's hard for them to justify pulling the trigger and basically making offers on homes. We did have a pretty good dramatic drop again near the end of the year. And that's we see some of that activity. Homes going under market the end of last year actually gave us a jump start for 2024 because as people were buying here in late 2023, even though this is 2024, this is the last year's numbers. As they were buying last year at the end of the year, many of those homes weren't closing until we got into January of 2024. And so we saw a pretty good jump in closed sales for the month of January, which we don't typically see. And that's kind of helped keep our inventory, closed sale inventory counts up so far this year, even though now we're starting to fall a little bit behind. I think that's going to change. So just take a look here. I mean, this is just from 1 year ago today. It's, uh, almost a half, it's just almost 0.5% lower interest rate than just a year ago. And again, there's that 0.75% down from our year to date high that we had earlier this year in May. The overall median interest rate for the year so far is 6.87%. And, that's not bad if we can start to see this median rate get closer to that 6.5 and then 6.25 and 6% range. That's going to open up a lot of confidence in home buyers as we move forward and move toward the end of the year. And I'm hoping that we'll start to see that. So I mentioned earlier, we've got the inventory graphic, and you've heard me talk in the past about how home inventory tends to follow mortgage interest rates. And you'll see the red line is the weekly mortgage rate line, and it doesn't come all the way through to this week because interest rates are updated from Fannie Mae on Thursdays, and that would be considered last week's business. So it's kind of trailing by 1 week. That's why it never quite picks up exactly with my end of week for Sundays. But what you're seeing here is that mortgage interest rates have, trended down since, really around the end of May, June, somewhere in that period of time. We started to see interest rates kind of slowly drop. But this last week, we saw that huge jump right here, that huge drop. We've also started to see as rates were going down, inventory levels were still continuing to rise. And you're going, well, Les, you said that rates and mortgage rates tend to follow each other. Well, they do, but it's usually the home inventory typically starts to change after the rates have passed. So if you see here back of late last year, we saw inventory levels rising and interest rates rising, and then rates came down, but yet we were still rising in inventory. That's buyers out there saying, is this real or is this really going to happen? And once they realized that, rates were really dropping at the end of last year, this is where we started to see that inventory start to go back down because home buyers were starting to buy. We're not seeing that same pattern this time around with the slow gradual reduction of rates, but I think we'll see that moving forward. And I think one of the reasons why we're not seeing our inventory levels come down as much is I think home buyers they're just waiting. I think on the fence. There's a lot of talk about the Federal Reserve that's going to meet here in September and maybe make some announcement of a rate cut for the prime lending rate, which will indirectly affect mortgage rates and other borrowing costs out there. But basically, this year the economy has been the biggest limiting factor. So home buyers are saying, okay, we maybe are going to hold off because groceries and gasoline and other consumer goods are still higher. So I think that has a lot to do with why we're still building inventory or at least maintaining inventory. Watch what's going to happen, and I'll watch with you here in the next several weeks. We're going to watch and see what happens now that rates have started to come down. And if we continue to see a decline in mortgage rates, if they get down around that 6.25, 6%, there's something magic that happens around those round numbers. And somebody the other day said the real magic happens. I think it was Dave Bell said it happens really around that 5% interest rate. It's just kind of that magic number where home buyers and home sellers really jump out. Well, I think we're going to see that maybe at that 6%, just because there's so much pent up demand. And so we'll watch that as we move forward here. The buying power here, this is the other side of the story. Just when interest rates come down, home buyers are able to afford more on their mortgage. I mean, it's almost like they're getting a raise on their affordability. So if we look back, 317, let's see, 317, 412 was the most costliest month here. to buy versus 297, 994 where we are today. You know, it's 297 is the bump in purchase price by about 6.63%. And you know that buying power of 317, 412 right here, that week 32, that basically just says, you know, they can that same $2,000 principal and interest payment only of a 30-year fixed rate mortgage. And I know that there are other factors involved into that. This is not an APR rating or anything like that. We're not trying to jump in the lane of a mortgage lender. Talk to your mortgage lender here about what your affordability is. But if you just simply look at what does a $2,000 principal and interest payment on a 30-year fixed rate mortgage, principal and interest only, buy you? That actually buys you about a $317,000 mortgage is what you could look to be spending on that mortgage. Whereas prior to that period, right over here in week 15, just before that, anyway, this 297, 94 was over here. And it just means that you actually have more buying power. So effectively, buyers got over a 6.5% bump in their purchase price from this reduction in mortgage interest rates. And that's good news. That gives buyers a lot of confidence here. So, and if you want to look at that in the terms of dollars and cents, if you subtract those two from each other, that means they can afford virtually almost $19,500 more based on that same $2,000 payment. So again, reach out to your favorite mortgage lender. I am not trying to get in the lane of a mortgage lender. I do not want to proclaim that I know anything more than some dumb math here, but do contact your mortgage lender if you got questions on that. So our final slide today, this is all about what is the Federal Reserve going to do. And this graphic is going to change its name when this changes here, because right now it's been Federal Reserve rate increases from 2022 to present, meaning we have not seen a rate cut since January of, since prior to January of 2022. We've seen interest increases in increments as much as 0.75%, 3 or 4 months in a row there. And I think that all the talk is that the Federal Reserve, after this long period of time from August of last year, July of last year, to coming up in September, there's some talk that sometime in this period right here, we're going to see the Federal Reserve announce that they're going to start to reduce the prime borrowing rate. Whether they do or not, who knows? And we've been told this before that they were, and then they weren't. In fact, earlier this year, they said, oh, we're going to see probably 2, 3, maybe even 4 reductions of that Federal Reserve rate. We are not going to see 2, 3, or maybe 4 of those this year. We'll see probably one in September. If we're lucky, maybe we'll see another one. That, again, indirectly affects mortgage interest rates and all other costs of borrowing. So, again, reach out to your favorite mortgage lender and ask them, what does the prime lending rate from the Federal Reserve, how does that affect mortgages? And your individual case will be different than somebody else here. So we hope that happens. When that does go down, this chart will start to stair step back down, hopefully, and then the name will change from increases to Federal Reserve rate changes 22 to present. So we'll see how that all happens there. So, all right, guys, that's the show this week. It's been mortgage rate palooza week, I guess is another way to put it. But enjoy hearing from you each week. If you like what you find on this channel, please hit the share button, hit the subscribe button, and that notification bell. And always know that your support helps this channel grow and helps me create more great videos for you and everyone else. So thanks for joining me. Head over to DesMoinesMarketValues.com, and we'll see you all again next week when we're going to talk about the Iowa State Fair effect on real estate. Until then, see you later.